Imagine being Amazon or Temu and trying to accept payments in Nigeria, Egypt, Pakistan, Brazil, Colombia, and Indonesia, all at once. Different currencies, different regulations, some places heavy on cash, others on mobile wallets or instant transfers. For most companies, expanding into emerging markets is a logistical nightmare. That's where DLocal comes in. They built a single platform that lets global giants accept payments and send payouts across 40+ emerging markets through one application programming interface integration. In this video, we'll cover their history, how the business actually works, why big companies use them, the powerful moat, and whether the stock is still massively undervalued. DLocal was founded in Montevideo, Uruguay in 2016 by Sergio Fogel, Andres Bzurovsky, and Sebastian Kanovich, all sparked by a simple idea. One of the founders got frustrated trying to make a simple online payment from Uruguay to the US. They realized emerging markets needed better infrastructure for cross-border money movement. They started by solving real problems in Brazil with pay-ins and payouts, receiving and sending money. They quickly pivoted to a pure business-to-business infrastructure model, focusing on seamless local payment rails for global enterprises rather than consumer-facing brands. The magic is their One DLocal platform. Merchants connect once via their interface and get access to over 1,000 local payment methods across Latin America, Africa, Asia, and the Middle East. This allows them to serve major industries such as e-commerce, ride-hailing, streaming, gaming, remittances, financial services, and more. Clients include Amazon, Google, Microsoft, Tencent, Booking, Nike, Rappi, Zeps, Didi, Spotify, and Temu. This creates a major competitive advantage. Global companies don't want to spend years integrating dozens of local providers separately, and DLocal offers everything they need. What's more, DLocal doesn't own banks. Instead, it has built a smart software layer on top of local rails, keeping costs low and accelerating growth. DLocal started with just a handful of countries in 2016 and has since scaled to over 44 countries globally. Latin America still dominates, accounting for around 80% of revenue, with Brazil as the largest single market, followed by Mexico, Argentina, Chile, and Colombia. Africa and Asia began expanding in earnest around 2018 to 2019 as global merchants demanded coverage in those regions. Africa gained earlier and deeper traction initially, while Asia picked up strong momentum from 2021 onward. This merchant-led expansion strategy remains core to DLocal. The company enters new countries when its biggest clients need support there. Today, Africa and Asia together represent the fastest growing part of the business, making up around 20% of total DLocal revenue, and that share is rising. However, the biggest step forward came in 2024 with the appointment of Pedro Arnt as CEO, previously longtime CFO of Mercado Libre. Arnt helped scale Mercado Pago into a payments powerhouse. His deep expertise in e-commerce and fintech across the emerging markets perfectly aligns with DLocal's mission to simplify cross-border payments in underserved regions. Under his leadership, DLocal has accelerated partnerships with Google, Shein, Temu, and Amazon, while pushing deeper into Africa and Asia, all while staying focused on profitable, sustainable growth. In 2021, DLocal went public, becoming Uruguay's first unicorn and one of the first Uruguayan companies to list on Wall Street. At the time, DLocal operated in just 21 countries, one-third of what it serves today, and generated roughly one-fifth of its current revenue. Recently, total payment volume reached $14.1 billion, marking the company's sixth consecutive quarter of above 50% growth, while revenue retention exceeded 140% for the fourth consecutive quarter, meaning existing merchants keep spending more as they expand countries and payment methods. DLocal also delivered strong margins for an emerging markets player, high cash generation, low debt, and a sizable cash pile that provided strategic flexibility. However, DLocal has never traded like a typical hyper-growth fintech. After the post-IPO collapse, the stock never regained its IPO level. Today, the market prices DLocal more like a risky cyclical payments company than a high-margin infrastructure platform. While emerging markets will always be volatile, this represents an enormous opportunity. The region is home to billions of underbanked people, rising smartphone penetration, and exploding e-commerce. DLocal still controls less than 2% of a $2+ trillion emerging market digital payments TAM, leaving a substantial long-term growth runway. DLocal is one of those companies most investors overlook because it operates far from Silicon Valley headlines. But behind the scenes, it is quietly building critical infrastructure for the digital economies of emerging markets. The company sits at the intersection of several massive trends: cross-border commerce, digital payments, mobile banking, financial inclusion, and the rapid growth of online consumption across developing economies. If management executes well, expands beyond Latin America, and maintains strong merchant retention, DLocal could become one of the most important payment platforms in the Global South over the next decade. If you enjoyed this deep dive into DLocal, smash that like button, subscribe, and turn on notifications so you never miss the next fundamentals breakdown. This is for educational purposes only and is not financial advice. Always do your own research before investing. Thanks for watching. I'll see you in the next one.